Hello, everybody, and welcome back to another daily episode. My name is Akash, and today we're taking a look at a bunch of things, right? So, before we actually get into the details of the stuff, make sure to give me a follow on Twitter at Mangyako with a zero at the end. Click this link in my bio, it will take you to my YouTube channel where I post content every single day. Make sure to hit the subscribe button and click on the bell icon as well. So, there's a couple of things happening in the market right now. The market has been crashing since the weekend. I think it was since before that, and on top of that, we have a couple of interesting things. For example, Celsius has paused all the withdrawals, and the worst has come to pass. And Celsius is, I think, right now heading to zero. Yep, down 61% today, and looks like it's gonna continue going lower again. So I'm not gonna get into the details of why this is happening. It's because of the staked ETH and ETH kind of depeg thing that happened, and then Celsius had a bunch of staked ETH, and now they're kind of depositing all their collateral, which is ETH and WBTC, to FTX, probably to sell or to use it as a collateral. Either way, I think Celsius is kind of going down. At least the panic is kind of setting in, and things are looking pretty bad here. As you can see here for Celsius, it's already down 61% for the day. So, like I said, right, today is going to be a packed day. We're going to be discussing a couple of things, right? The first thing is we're going to talk about why the market is crashing and how it was triggered. And then we're going to take a look at Bitcoin and a couple of things what to expect this week because of the Fed FOMC meeting. And then we're probably going to take a look at Ethereum as well and discuss the possible bottom scenarios. To probably even look at CME gaps, right? So it's gonna be a really packed episode. So make sure to strap in. I'm gonna try to summarize as quickly as possible as to what's happening. Right. So let's get on with Celsius. Right. Celsius has been like a major player, and the domino effect that the collapse of Celsius is going to cause is pretty huge. So, like I mentioned earlier, right, staked ETH and ETH is where all the problem starts brewing, because like unlike like a lot of people try to comparing staked ETH and the ETH dpeg to what happened with Luna and USD, but unlike Luna and USD, staked ETH and ETH has a 1:1 peg with ETH, right? So there's no fundamental flaw in what's happening with staked ETH and ETH, mainly because of, again, right, like it's completely pegged and the peg is fine, and the momentary depeg that happened, like I said, is momentary and it's gonna come back again. But the one that's actually taking a lot of hit is Celsius because of the amount of ETH or staked ETH that they had locked in illiquid places, right? So now that there was like there's a bank run on Celsius, investors are kind of not just investors, right? There's panic setting in the market, which is causing the markets to drop. And on top of that, you can see, I think I just retweeted this. Not sure if I can find it. Right, so Celsius sent a bunch of ETH to FTX, right? And it kind of reminds me of the plus token thing. I saw this comment from, hold up. Yeah, so Celsius sent 3,500 BTC and 50,000 ETH to FTX. So it's only natural for ETH to take a massive hit as compared to Bitcoin, mainly because the whole scenario kind of revolves around ETH, right? So yeah, and the interesting thing is that Celsius also stated that if in the event that we do go to in the event that we go bankrupt, so yeah, they're basically exploring even the possibility of a bankruptcy, right? So things are pretty bad for the ecosystem. It kind of reminds me of the days when there was like a massive inflow of plus token scam tokens to exchanges, right? So yeah, so this is what's happening in the ecosystem right now, and this is why the market is crashing. And I believe the crash was kind of like all of this was happening in the background, but the CPI announcement on, was it on Friday? I'm not sure when. I think, I'm not sure. The CPI was on Friday. Yeah, it was on Friday basically, which caused the market to tank, and that's when this whole fiasco began. And since then, the price has been crashing nonstop, right? So let's take a look at Bitcoin and what's happening. All right, let's start from the high time frame perspective, which is this 1 week chart here for Bitcoin, which I've kind of spoke about at length in FX Street videos or my articles at FX Street. right? So the void basically is uh, this gap which extends from 29.5k to 11.9k. Now this gap is basically obtained from the VPVR, or the volume profile indicator, or the tool. This tool kind of basically maps out the volume profiles, like where Bitcoin price traded a lot, where the volume was high. Basically, if there's a lot of consolidation, there's a there's a peak here, or a high volume node. That's what you call this peak as, right? And if there's a dearth like this over here between 43k to 41k, that's called as a low volume node. So basically, volume profile maps out the places where most volume is traded. It kind of serves as an inefficiency, kind of like FVG, right? Which is an inefficiency, which is formed when the price moves up very quickly or the price moves down very quickly. So that said, the 2020 volume profile and the 2021 volume profile kind of shows that there was a massive gap extending from 30k, 31k, all the way down to 11.8k. Like there are brief spikes up here, but none of those as significant as the ones that you see down here, which is at 11.9k. Right, so I kind of spoke about this at length in one of my videos, and also in a couple of FX Street articles, right, where I kind of mentioned that if we get a breakdown of the 29k, 29.5k, there's a good chance price could head all the way down to 19.2k, which is where the volume profile kind of bumps up, or like bumps out, which is a kind of like a high volume node here, relatively speaking. So this is where I'm expecting Bitcoin price to kind of stabilize and bottom, and this has been a bottom for quite some time. So let's address uh, another important metric from a high time frame perspective, which is the 200 weekly moving average. Now, let me just show you the importance of 200 weekly moving average before I actually get into why it's important. Right, as you can see here, 200 weekly moving average has historically marked bottoms for Bitcoin. For example, if you look at this one here, beyond the 200 weekly, the price has dropped roughly 13% here. And the 2018 cycle basically bounced off the 200 week moving average, and the 2020 COVID crash was basically 30%. There was a 30% deviation from the 200 week moving average. So now that we're kind of around 25k, there is a good chance price could not just tag this, but there could be a 30% drop as well. If we do that, right, measure 30% from here, let me just do that. Yep, you could see Bitcoin crash down to 15.6, roughly 15.7k, right? And yeah, so that's the importance of the 200 week moving average. So now let's get back to our old chart, which I've lost. Yeah, so basically that's why the 200 week moving average is pretty important. And let's not get into the reason why this is important, but I mean, apart from the technicals that I showed you, how why this level, this moving average is pretty important from a stock market perspective as well, right? So either way, right, 22k is another important level that you kind of need to keep in mind, right? So the first level is 22k that we're looking at, and this next level is 19.2k. And then we have a couple of other minor bumps here that you can kind of take a look at, right? So let me just mark these intermediate levels, right? There's one here, right? And then there's another one around here, which is 15.5k. There's another one around here, 13.5k. So these are the intermediate levels that I'm looking at. Like if you look at it just black and white, then you have 29.5k, and then you have 11.8k. These are the two macro levels. And between these macro levels, there's another important level, which is 98.2k. And apart from 19.2k, there are intermediate support or resistance levels here at 23.4k, 15.5k, and 13.5k. Right, so these are the levels that I'm going to be observing. So mainly from a macro perspective, right, like I would be inclined to buy Bitcoin around 19,000. Like a couple of reasons here. The first reason is because the volume profile. Second reason is because of this bear flag that you see here, which kind of forecasts a drop to 19k. Although it forecasts a drop to 17k, 17.8k, I would love to buy Bitcoin around 19k. right? And the third reason being that the 2017 high was also around 20K, right? So 19.2K from that perspective makes complete sense, right? There's a multitude of factors kind of confluencing around 20,000. So give or take $2,000, right? It's either 22K, 20K, or 18K. That's where I believe the Bitcoin price is going to bottom, right? So yeah, from a higher time frame perspective, this is what I'm looking at, right? Let me show you another chart which I've been showing for quite some time, and even before I went on the weekend retreat, right, I kind of mentioned that we did get a breakdown here on the 10th of June. I'm not sure. I'm gonna find it right away because I should tweet a lot, should post a lot. So yeah, even on the 10th or probably the 11th of June, I kind of pointed out that we did get a breakdown of this smaller bear flag, and so far things are looking pretty good here, right? So yeah, even in this particular pattern here, right, the smaller one or the larger one, both kind of predict 20,000 as their target, right? So like I mentioned, right, this is the first confluence. Second confluence is the VPVR, and the third confluence is the 20,000 all-time high of 2017. So yeah, basically everything is kind of pointing towards this thing, and if the price continues to crash, the 200-week moving average could slightly bend and point towards, like, even now, right? It's kind of within the vicinity of my target, which is 20,000 plus or minus 2,000 as the buffer point. So yeah, basically from a macro perspective, like to conclude, let me not just keep on ranting. To conclude, right, macro perspectives all hint towards a drop to 20K. Right, this is what I've been saying for quite some time. But the only addition that I'm adding, bringing value to this particular video, is by talking in depth about this volume profile and how the price and the price's venture into this void has already begun. Now, another thing that I want to mention here is that for Dogecoin, right, like for a lot of the time, for much of the time, right, there was a gap. There was a volume profile gap from 0.12 all the way down to 0.08 or 0.07. If you watch any of the Dogecoin videos that me and John did back in Jan or December, you will notice that we were expecting like a sudden and a massive crash for Dogecoin, but that did not play out. Even though there was a massive void like this over here, the Dogecoin did not crash suddenly, but it slowly and very painfully continued its downtrend, right? So something similar could happen here for Bitcoin, or we could just see a quick market crash and then a quick recovery. Right now, I would love for the second scenario to kind of take place, but if it's the first scenario, then the grind is going to be absolutely brutal. Many people are going to get chopped out of their uh, positions, capital, that kind of stuff, right? So two things. If we get to fill this void completely to the downside, it could be a slow chop, or it could be a quick crash and then an uptrend, kind of like what we saw here for during the COVID crash, right? So what kind of makes this even worse, the macro outlook, and like although me being conservative or like bullish, I'm expecting the price to drop to 19K. The only thing that makes it worse is the traditional market and the market conditions and what the Fed is planning, right? So let's move on to the FOMC meeting from here. The FOMC meeting has been a good trigger for quite some time. And if you look at the next Fed meeting, which is on the 15th and the 16th, it's a 2-day meeting. Sorry, June 14th and 15th is when it's going to happen. Right, June 14th, Tuesday and Wednesday is going to happen, right? Tomorrow and the day after. It is going to cause a massive disruption. Now, we could get another leg down. So that's what I'm looking at, right? So the reason why I'm expecting another crash is because of what Fed is going to do, or what the expectations of the Fed, right? As you can see here in CNBC meeting, they're kind of expecting another 0.5% hike from the Fed. Usually so far it's been 0.25 or lower than that, but now the people are expecting at least a 50 basis point bump in the rate hike. And now this will put the hike from 1.1% to 1.25 or 1.5%. And that's exactly what a lot of people are kind of hoping or expecting and predicting, right? The FOMC is all but guaranteed to raise its Fed funds target by half a percentage point to a range of 1.25% to 1.50%. Now, so far, every hike has been has kind of translated into a drop for the stock market, and as a result, the drop for the Bitcoin price as well, and the altcoin market. So basically, this hike in Fed rates this week is going to be a massive bump, unlike what we've seen before, and it could potentially kind of trigger a recession for the traditional market, and that could potentially crush Bitcoin to 19K or perhaps lower, right? The looming recession is kind of what makes all of what's happening right now look pretty small. It would, like, the recession is like, if I were to kind of use analogy here, what we're kind of looking at right now is basically us fighting Hela, and the only way to stop it, the only way to stop this crash is by a recession, which is by triggering a Ragnarok. Oh my god! If for people that do not understand, this is an analogy from the Avengers. Thor Ragnarok. So basically, Thor prevents Hela from killing all of the Asgard by invoking another massive crash, which is by triggering a doom of the Ragnarok, basically with Surtur. So yeah, that's kind of what's gonna happen, guys. Apologies for this extremely cringe analogy that I just did. But yeah, either way, things are looking pretty bad. Even with the FOMC coming around in a couple of days, things are looking bad, right? So let's get on to what you can do in terms of Bitcoin, right? So I just want to take a quick look at this chart, but before we get into this, right, I have to show you guys another chart, which is the CME chart, right? The last time we discussed this, right, the May 12th crash was pretty important, right? The May 12th crash only filled this gap here, which was extending from 26K, 23.8K, only down to this level here, which is 24.9K. And now that the price has crashed quite a bit, right, it kind of looks like the price is going to completely fill this gap, right? So that would mean that Bitcoin price could go down to 23.8K. Now 23.8K is extremely close to the 200 week moving average, 22.4K. That's just $1,000 difference, right? So, but I kind of believe that we're not going to see a complete fill of this of the CME again, right? It's too early for me to predict anything, but I'm going to go out on a limb. Like, even though I'm going to be wrong, there's a high chance that I could be wrong. I'm going to predict this, right? What I'm expecting right now is, forget this smaller range that we've been kind of traversing since May 14th to May 16th, right? So let's forget this for now. Forget this MSB, forget this previous Monday's high and everything else, right? So the only thing that you kind of have to pay attention to right now is this gap here, this range here that was formed between May 12th and all the way up to May 13th. Now, if you look at this in terms of a range, the price has basically been above the 50 retracement level here at 28.1K for literally the most part, right? And now that the price has flipped below it, look at this perfect retest, right? The price breached the 50 retracement level here, retested it, rejected, boom. Then we got a sweep of the range low. Now, as I've explained in a lot of my videos, right, range bound movement is pretty simple to trade, assuming this is a range bound, right? You get a range, right? The price forms this range, and then what happens is the price either sweeps the range and then goes up to sweep the range high, or it sweeps the range high and then comes back down to sweep the range low, right? This is what happens, right? And in our case here, we form the range and then we swept the range high multiple times, and the price is finally swept the range low. Now, not just like there is a sweep of the range low, yes, but if you look at it, like if there's a quick recovery above 25.3K, then there's a good chance price could head up quite a bit. Now, this is what you're going to be targeting, right? If you look, assuming we get a swing low that is formed here from where it is right now at 25.1K, there is a pretty good chance price could go all the way up to 27.7K, probably even retest this 28.1K level, right? Let's not get optimistic. Like, for now, expecting a retest of 27.4K would be pretty good, right? So let me just go back to this chart here and talk about the weekly green candlestick that was formed here in the last week of May, right? So this candlestick is pretty interesting because since then the price has formed two red weekly candlesticks. Now this would technically be an FVG here, right? So this FVG is present at 29,300. So let's just go here, check this out. 29,300 is where the FVG is present on a weekly time frame. Right now, this is pretty interesting. So I'm going to mark these out so it will be helpful for us to trade our. Actually, you know what? I could just do this, right? Oh, yeah, I'm dumb. Okay, so cool. So now that we've had our FVG marked on the weekly time frame and on a 4-hour time frame, this is where the FVG is present. Right, so all I'm waiting is for the price to recover about 25.3K, and then I'm probably going to long this around, once we get a confirmation of the recovery, I'm going to long this to this FEG up here, 26.8K, probably even up to this level here, just to be sure, right, at 27.4K. Now, these are the levels that I'm looking at. These are the levels I'm going to be looking at for quite some time until things change. So, yeah, that is my expectation for the Tuesday up to Wednesday. Wait, hold up. When is Friday? Okay, so it's the FOMC meeting is gonna start on the 14th. Like since I'm in India, it's gonna start for me somewhere around 10 p.m. or like midnight for me. And that would be the first day, and it will end basically anywhere between 15 and 16 is when it's gonna end. So hopefully by 14th or 15th, if we get a rally up to these levels, it would be pretty good because I'm expecting the price to tank again, right? So somewhere around 15th or 16th is going to be a good place to look for shorts, and the target for shorts would be this lower limit of the CME gap here at 23.8K, right? So basically that's pretty much it for what I'm looking at for Bitcoin or like the entire market. How I'm going to be trading futures. As for spot positions, I already bought a couple of spot back in, I don't know when, and those coins are down bad. I'm just going to keep holding them, although that was like a very small amount of my portfolio that I allocated to these altcoins. So yeah, is there anything that I left? I've addressed everything, right? So another thing that you guys have to pay attention to is this particular candlestick posted by Avavat, right? So this guy, yeah, so as you can see here, 12th, today is the 13th, blah blah blah, then you have 15th, 16th, 17th. Okay, so hold up 10th was the CPI, right? And that's what triggered the whole crash. And then we are currently trading here on the 13th, right? Although this was supposed to be kind of like an okay-ish trade, of okay-ish day for Bitcoin, the price has crashed quite a bit because of Celsius fallout. I'm expecting, right, again for 14th, I'm expecting the price to kind of go up. And then as you can see here, at 15, 16, 17, basically 15 and 16 is the FOMC meeting. And then basically, yep, I think we're not going to see any good uptrend at least until the third week of the June. Right, hopefully these 2 weeks would kind of salvage what we've lost over the last few days. Right, so yeah, this is one thing that you guys have to keep an eye on. It's pretty interesting, the charts that this guy posts. Yeah, that pretty much sums up my analysis, right? For Ethereum, on Bitcoin, it's done. Let's actually, you know what? I'm gonna do another video for Ethereum. So, yep, if you enjoyed this analysis and my take on the markets and my scalping plan, please make sure to like, comment, and subscribe. If you have any doubts, please make sure to just go ahead and give me a follow on Twitter at market with a 0 at the end. Comment on any of my posts. I will get back to you as quickly as I can. Have a great day. Stay safe. Don't get chopped out. Peace.